All right, today we're jumping into a guide that pretty much flips everything Wall Street tells you completely on its head. It's called the Bogleheads Guide to Investing. And look, it's not some complicated thing for finance gurus. It's a super simple, really powerful way to build wealth. And it was created by regular people for regular people. And the whole thing kicks off with a wild idea that the world of money plays by a set of rules that are, well, they're completely backwards.
Okay, so here's the game plan. First, we're going to look at why common sense is just wrong when it comes to investing. Then, we'll talk about building a solid financial foundation. After that, we dive into the simple path to wealth itself, tackle our own worst enemy, our emotions, and finally, wrap up with how you can totally do this.
So, let's kick things off with a bit of a paradox, right? In pretty much every other part of your life, you follow these tried and true rules to get ahead. But here's the kicker. In the world of investing, following those exact same rules is, as the Bogleheads put it, almost guaranteed to make you poorer. Getting your head around this is honestly the first huge step.
Just look at this. It's the complete opposite of everything we're taught. In normal life, you hire an expert. But with Boglehead investing, it turns out that costs, what you don't pay for, are actually the best predictor of how well you'll do. And get this, when a crisis hits, your gut is screaming, do something, take action. But the winning move here? It's almost always to do absolutely nothing. See, it's not just a different strategy, it's a whole different way of thinking.
Okay, but hold on. Before we even dream about buying a single stock or fund, the Boglehead way says we have to get our own financial house in order first. Think about it. Investing without a solid base is like trying to build a skyscraper on sand. The second things get a little shaky, the whole thing is just going to collapse.
And listen, this isn't some get-rich-quick nonsense. This is the boring but essential groundwork. It all starts with a change in how you think, followed by two super-critical actions. Paying off high-interest debt, that's a must, because that kind of debt is like trying to run up a down escalator. You're working your tail off and getting nowhere. And that emergency fund, that's your firewall. It's what stops a surprise car repair from making you sell your investments at the absolute worst moment.
So here's the key takeaway, the big mental shift. You gotta stop obsessing about your paycheck. Your salary is what you earn, sure, but your wealth is what you actually keep. The real scorecard here, the one that truly measures your progress toward financial freedom, is your net worth. That is the one number that tells you the real story. So you need to calculate it, track it, and make it your mission to grow it.
All right, so now that our foundation is solid, we can get to the really good stuff. This is the core strategy, the aha moment. It's the simple, kind of brilliant solution that just cuts through all the noise and the complicated junk that Wall Street is constantly trying to sell you. And this leads to a pretty big question, right? I mean, you look at the financial world, and it just seems impossibly complex. You've got all these professionals in suits staring at charts all day, so how on earth can a regular person, someone with a normal job, a family, a life, how can you possibly win at this game? Well, the answer is kind of shocking, but it's not just an opinion. It's backed by decades of hard data. Using the simple passive strategy we're talking about, you can expect to beat about 80% of the pros. Yeah, you heard that right. Over the long run, you don't just hang in there with them, you actually win. And this quote from William Bernstein just nails it. The idea that an index fund is mediocre? No way. It practically guarantees you do better than most. And here's the secret. You stop trying to be a hero. You stop trying to pick the next hot stock. You stop trying to find some genius fund manager. Instead, you just buy the entire market, all of it, through a simple, low-cost index fund. You're not trying to beat the market. You're just capturing the market's return. And that, it turns out, is how you end up ahead.
So why does this work so well? It's powerful because it takes out the two things that absolutely kill most investors' returns: crazy high fees and constant frantic trading. By keeping your costs super low, more of your money stays invested in compounding for you. And by buying the whole market, you're instantly diversified. You own a tidy piece of thousands of companies, so you don't have to play the impossible guessing game of who's going to be the next big thing. It's the ultimate set it and forget it, or maybe set it and go live your life approach. And this whole idea of not trying to pick winners, it doesn't just apply to individual stocks, it applies to entire markets. I mean, look at this chart. Some years, US stocks are the big winner. Other years, international stocks just crush it. Back in 2001, US stocks won just by losing less. But then for the next 3 years straight, international stocks were the place to be. By owning both, you guarantee you've always got a piece of the action, wherever it's happening. It just smooths out the ride, you know? It tames those wild zigs and zags.
Okay, so you might be thinking, this sounds simple enough. And you're right.
Knowing the strategy, understanding the math, that's actually the easy part. The really hard part? It's sticking with it. Because once you've got your plan, you're going to discover that the biggest threat to your financial success isn't the market, it's not the economy, it's the person staring back at you in the mirror.
Let's talk about the first mental trap, recency bias. This is our brain's tendency to think that whatever's happening right now is going to keep happening forever. So when the market's been on a huge run for a few years, we get greedy. We think it'll never stop, and we pile in right at the top. And when it's crashing, our brain screams that it's going to zero, so we panic and sell at the very bottom. This one little bias is basically the engine that drives the classic investor mistake, buying high and selling low.
And then there's loss aversion. We are literally hardwired to feel the sting of a loss about twice as intensely as the pleasure of a gain. Think about that. Losing $100 feels twice as bad as finding $100 feels good. This makes us act irrationally. We see our portfolio dip just a little bit, and that fear of feeling more pain kicks in. So what do? We sell. We take what was just a temporary dip on paper, and we turn it into a permanent, real-life loss.
And of course, we've got to talk about the herd mentality. You know what this is like? When all your friends, the news, everyone online is talking about the latest hot stock or some new crypto, the fear of missing out is just immense. You feel like you have to jump in. And the same thing happens on the way down, when panic is in the air and everyone is selling. Abandoning your solid, smart, and yeah, maybe boring long-term plan to chase the latest fad, it is the fastest way to wreck your financial future, period.
So let's pull all this together. What's the biggest message here? It's not just that investing can be simple. It's that you, yes, you, are absolutely the best person for the job of managing your own money. You don't need some fancy, expensive advisor from Wall Street. You just need a simple plan.
And who better to hear it from than the man himself, Jack Bogle. He said he's repeated the phrase, stay the course, 1,000 times, and he meant it every single time. And that's it. That's the whole game right there. The hard part isn't picking the funds. The hard part is having the discipline, the sheer guts to stick with your plan when things get scary and when things get exciting. You just have to stay the course.
But here's the best part. You don't have to do it alone. That discipline we're talking about, you don't have to summon it all by yourself. There's a huge, incredibly helpful community of thousands of other Boglehead investors out there, and they're all there for one reason, to help each other tune out the noise, get answers, and most importantly, help each other stay the course.
And so that leaves us with one final, really important question. The strategy? It's simple. The proof that it works? It's undeniable. The path is laid out right in front of you. So the only variable left in this whole equation is you. Do you have the discipline to follow it?